Hello. Hey, testing 1 2. All right. Hey, it's me again, DayTraderRockStar. Going over. I'm doing some research here today, Friday, and I'm like, still thinking, coming across so many interesting things that I want to always share with you guys. So I'm going to put this, make this part 2 of what we just left off with that video I just sent out. We'll actually just add on to that and saying after we determine the patience is so important in this market, patience. How do you combine the other things? You still need other. You can't just be patient. You got to be able to step up to the plate one time and make something happen. So again, patience is part of it. Again, waiting for your pitch and everything. And again, what's the next part? All right, having a structured system that that keeps you in line. It doesn't give you it's okay to get a little buck crazy once in a while, but then you have to get yourself back in line and get focused in the markets. The markets are the most aggressive, perfect machine. So if you're a little bit late or a little bit slow on the game, the market will end up taking you out, pushing you beyond your boundaries. So you have to be prepared for that, both mentally and actually mostly mentally. So again, wanted to go over Activision, ATVI here. What a great trade this was, and why does this Activision look so good? First of all, it's a great example of multiple indicators. All right, it's a great example of pattern trading. It's a great example of everything that you want to see in one chart. All right, so again, this is a good example for me to just go over the indicators again, why I like them, and why you should continue. You should consider combining as many as you can to get and then combine that with the patience, and then combine that with anything else that you need to add to it, and you're going to become a successful trader. So, going through the indicators here, of course, we have a downward trend line, which is part of trend lines, and that's a major indicator in my book of the 5 I use. Of course, number 1 would be the stochastics here. All right, these are the full stochastics. 1433 are the parameters, and basically, I'm using this as a timing, timing with the price action, and also looking for any divergence between the stochastics and the price action. So it's an indicator that's well-rounded. It works great with the moving averages. It works great with the trend lines. So I use the moving averages again, the 20, 50, 200 moving average as an indicator. Then I use stock patterns. And if I see a pattern like I see here, again, this is more of a W pattern. I used to trade out of a W. But in this, you can see that downward trend line. You could see the inverted head and shoulders right here. This is where you start to see this happen. What happened here is we're pulling back, consolidating here right at that $10 area, holding up, and then they had some good news pop. You can't do anything about that. You can't do anything about that. But one of the greatest trade setups are a reversal off of that pop and pull back to that trend line that you just popped over. And it's always going to usually be lower because we're looking at this downward trend line, so it should be lower than the price. It would have to be. And then that's where you're going to look for that strength that coming out. That strength comes in. This trend line, it confirms itself. A new trend is confirming itself, and that's where you want to really go long. So again, this is a good example of that thing. You get a good example of a head and shoulders pattern, inverted head and shoulders. You have some triangle patterns that broke down here. And even if you go out here now, what the most important thing I think on this thing, even if I go out here further, go way out here, you can see these little spikes. Now, timing is so important. That's why I said wait until each one of these stochastics get to an overbought area. If you look at the majority of times that Activision ran, all right, if you time this area, you want to get the most move out of your money. So why would you try to just time something or get in here because you feel good about it? You would want to just have everything, stochastics pull back, price pulls back, stochastics pull back, price pulls back. The trend is still there. There's no doubt that the trend is still there, so you're very safe on taking that entry. Why don't people just take that entry? I mean, it's just proven itself time and time and again. Upper trend lines, everything here lines up for a continued move up. Once you start, once you get up here, it still gets the proper moves. We start losing the trend line. We can't add that in as an indicator anymore. So again, this becomes a more dangerous area because you're always looking for the 3 to 5 indicators, and if you can't get that, it's probably most likely things are getting a little shaky or getting a little scrambled. You can't really read the market as well as they did before. And then until that market becomes back into thing, you get a new trend line developing. You can work off of that with your stochastic. So again, multiple areas you could trade here. Times that you might not want to trade, you might get chopped out. And other times you want to trade, and it just takes patience and rotate your stocks and have a good focus list. That's, a stock that you can actually track. So I thought that was a great example. It kind of adds on to the conversation we just had with the, just having the patience as one of the prerequisites. Is that the word? For a successful trader. And I noticed I got, that had to take time to get that in my own trading. But it also took a lot of, trial and error. But eventually you realized, hey, all the charts, all the things, they can't, hide anything. You just have to watch price action. And, that's half the battle right there, understanding why things move and patience. So I'll leave you with that. I'll see you in the markets.